Okay. Good afternoon, everyone. Good evening, good morning, depends on when you are watching this video. So, we are supposed to have a class that was 2 days ago. So, but the network. So, this is just a video to make up for the other class we missed. So, then still on market structure. So, the last time we talked about the candlesticks and a little bit market structure is what we talked about. So, but today now I will dive in more into the market structure. So here on my screen here is I have a chart of AUD USD. So I have a chart of AUD USD here. So then I will be explaining what market structure is, though we've learned something about it before. So, but now we'll be talking more about it. So the last class I said we have three different types of market structure. So like we have three different type of market structure. So then I said the first one is uptrend. So I said the first one is uptrend, which is the uptrend. Okay, sorry. So the first one is uptrend, while the second one is a downtrend. That's downtrend. Then I see the third one is ranging or consolidation or consolidation. So uptrend, we have downtrend, and we have consolidation. So ranging or consolidation. So that's the three we have. So then the first one here I'll be looking at is the uptrend. So let's start with let me just move this here to the right corner. So the first one we'll be starting with is the uptrend. So from the word up and trend, like if you remember, that's what I started with in the previous class. So from the word up and trend, it means something going up, but it's not moving straight, because so when you talk about trend, it means something is actually in motion. So whether motion to upside or to downside or to sideways, so but it's moving. So up trend is just like moving up, then down trend moving down. So ranging or consolidation, it means like something that has no direction. When you say something is moving in a range, it means that's a distance that thing can cover. So it cannot exceed that distance. Just like Mr. Samuel said in the previous class. So I asked him and I said, what does he understand? So and he said it means like something that it means a distance, to measure a distance, something that can move from one distance to another. So that's just the same thing. So when you say something is ranging, it means it's moving in like it's not exceeding some distance, like something, or we say it's consolidating. It means if it goes up today, tomorrow it's coming down. So it has no direction, just moving within a range. So that's it. So the first example I'll be showing us here is from this uptrend. So uptrend. So one thing about market is market doesn't move in a linear form. So it moves in like a form of zigzag. When something is not actually straight, so it doesn't move in a straight line. So the first one here is the uptrend. So let me just test. So number one, say one here. So one. So the first one here is the uptrend. So when we say market is trending, so you don't know if it's trending up or trending down. So how do you know if market is trending up or in an uptrend? So this is what an uptrend means. So I'm gonna explain it. So the last time we talked about candlestick, then we remember we do mention I made mention of support and resistance. So I said support and resistance, which means like this area like this is our resistance level. So this is our resistance level. So then this is our support. This support. Then we said, everybody said they understood what we said that day. So this is support, this is support here, this is support, this is resistance, resistance as well here. So your knowledge on support and resistance is still the same thing you are going to transfer in order to understand this one perfectly. So you still make use of it to understand this one perfectly. So now we are now talking about our support and resistance. Now we are moving forward. So how do you now use your support and resistance to know if market is going up or down? So like even if you ask a 10-year-old a child and said, this thing I drew here, is it facing up or facing down? They can just tell you that, okay, at least it started from, where's mine? So at least this thing started from this point, then moving up gradually, then it got here. So you can just tell me that, okay, this thing is going up, yeah? So this is what we mean by uptrend. So this is uptrend. So this leg you are seeing here that pushes up is called an impulse leg. So this is an impulse. This is a correctional. This is an impulse. This is a correctional. This is an impulse, a correctional. You can just call it a push up, a retracement. A push up, a retracement. Either you say a correctional or a retracement. Okay, let's use retracement. That's more simpler. So this is a push up, then this is a retracement. Retracement, you throw something up, is retracing down, like it's coming down. So this is a retracement, this is a push up, this is a retracement, this is a push up, this is a retracement. So this one here like this is an uptrend. So then if you check the left side of my screen here, you can see a lot of tools here. So we have the trend line, we have some other tools. So can use also to know if market is heading up or heading down So this one here is called, you can see it is called trend line, rail line, information line, extended line, but you don't actually need everything. You don't really need everything. So you just only need like about 3 to 4 of them here. So you don't really need everything. So this one now we have the trend line here. So I will be using the trend line. So this is the trend line. So trend line now, you can just use your trend line to determine a trend. Like you can use, from the word trend and line, it means is a line used to determine, like you use it to determine a trend, to know the direction of trend. So it can just tell you the direction of trend. So that's what trend line does. So let's also now we want to apply the trend line on this guy here, on this trend here we drew here. So let me apply this trend line. So the trend line, what you do, how to apply, this is how to apply a trend line. So I'm coming. Just want to try to see if there is something we're missing here. Okay, let me just take it out first. So, let me reset my screen. 1 minute, 1 minute. Okay, so back to what we were saying. This is trend line. This is trend line, like I said. So this is how to apply trend line. You use it to, if you want to use it to determine your current trend. So you already know that, okay, market is moving up. So you want to apply trend line. So you can see it. Look at this. So you can see that the price is looking like the price is going up, then coming back to this line, then going up, then coming back to this line, going up, coming up. So what does that tell you? So it means that, okay, as long as this trend line didn't break, as long as this trend line keep holding, then It means, okay, just look at it. Anytime price comes back to this trend line, what's usually happen? A bounce will happen. It will bounce, then start pushing up to the start pushing towards upside. So then it comes back again, coming back again here, then bounces off again. So then what will you be expecting the third time? So now you are now aware of the trend. So you are now aware that, okay, once this thing come here, then it's always bouncing, then going up. So then the third time, everybody is now aware that, okay, now this is the trend. Now we have a trend. So all you do is expect it to come back, then wait for the bounce, then get in. So I'm that no that's just one of the way to trade. So but I'm just giving us some examples here. So I don't ask you to go and buy and sell now. No. So I'm just telling you one of that's the uses of trend line. So that's one of the things you use trend line for. So that's how to use it. So you use it to determine a trend. So to know if a trend still holds or the trend has finally come to an end. So that's one of the things we use trend line for. So you can see this one now. So this is a push up, then this is a retracement, or you call it a correctional. So push up, retracement, push up, retracement, push up, retracement. Okay, now let's see a live example, a live example of an uptrend. So let's see a live example. Let's go to the chart. Let's see a live example. Just want to try to, okay, let me go to daily. See if I can get some cool examples. Okay, so this is, here is my 4 hours time frame. Just want to show us where we have a nice push to the upside. Sorry, trying to shrink my chart a little bit. So this here is my chart. Just want to see if I can actually get something nice, like a clean. Let me see if I can, something not too big, okay. All right, let's just use this small part. So let's use this small part. I want you to focus on this. Okay, let's use this instead. I want you to focus now on this area. So like now you can see market, this price now dropped to this area. So like crash to this area, then the market now decided to push up a little bit, like to trend upward a little bit. So now then you can see the trend, where the trend started from. So this is one, then we have two here, right? Then we have a push up, then we have a retracement, then we still have a push up. So you can see, like, I'm coming. So we have, this is a small, like it's just a mini uptrend, like it's just, but you can tell that this thing, okay, push to the upside, right? So, but this is just an example. So look at it. Let me bring my trend line coming. I need a longer trend. Let me see if I can see a long trend, a place where we have something. AUD USD, AUD USD, AUD. This guy is not really giving me what I want. Let me just give me a moment. Okay, I will use another pen instead. Let me use XAU is a perfect example for this. XAU USD. So XAUUSD is gold. So it's what people call gold. Gold, gold, gold. You hear them saying gold, 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 gold. So that's good for you. XAUUSD. That's the symbol for gold. So let me see if I can see some nice example. Okay, cool. So let's use gold. Let's use gold. Let's use gold. Okay. So we can see. I want you to focus on. Let me use an horizontal, a vertical line. So focus on this side. Forget this side. So this side is still uptrend. So, but I just want to bring out example here, like example here. So just focus on this side. So look, we can see this one now. You see, this is an uptrend, but I want you to focus on this side. So let's assume this thing started from this side. We had a crash here, then push up, then correctional, okay, or retracement, then push up, then a retracement. So this is actually, we still have some small retracements here. So let me see. But I want you to focus on the major retracement, like the major pullback. So this is a push up, this is a pullback, this is a push up, this is a pullback, this is a push up. So you can see, so then this is a push up. So this one now, you can if you ask someone, they can tell you that okay, this thing is going up. Even if you put trend line, I'm very sure trend line will still tell you the same thing. Okay, look at it, look at trend line. So look at that trend line. So this is example of an uptrend. You know, the one I drew earlier is a drawing, so it's very perfect. So, but it's still the same thing as this one because remember I did something like this. Okay, let me draw this one out. Let me mark it out as a drawing. So this is it. 1, 2. We still have a push up. We have a pullback. We have a push up again to this area, right? Let me see. Okay, we have a push up to this. I want to continue this thing I'm doing, and then we have a push up. Then what happened again? We have a pullback. We have a pullback. Then we have a push. This now we are now pushing up now. So if I should extend this my trend line now, if I should extend this my trend line, you can see that even this one, this new one, you know, I didn't add this part before. So even this new one still bounce off this trend line. So you can see, so this one still bounce off this trend line. Then it means like now we are now heading to the upside, right? So we are now heading to the upside now here. After we bounce, then we fail to make a higher high, then boom. It's now looking like something that is going down. I don't know, but I'm just telling you, like showing you example of an uptrend. So you can see this, look at the bounce, and then we bounce like 4 times. So let's assume, okay, I want to show you something here. We had this first one, you didn't know maybe the market is going up or down, then we come here, then bounce off this region. By the now, we've already bounced 2 times. So then this third one, you already know, okay, this thing bounced first time, second time. So and let me just wait for the third bounce. So then the third one came here, then bounced off this region. So you know, you already know, okay, all the time this price, or when price comes to this trend line, it's always bouncing off. So immediately, so it means if this thing should come here and touch this trend line the third time, then bounce off, then I'm going to be buying. So I'm going to be buying. So when market is going up, you buy it, then to the upside, you buy it, then you sell at it's just like when, okay, just consider it as when, okay, let's say price of, what should we use? Let's use common thing. What's common that everybody used to use? Okay, let's say phone. So let's assume, okay, maybe, but let's assume now this is just an example. Like I'm not giving you a correct price. Okay, let's use cement. I think no, phone is better. So let's assume, okay, everybody wants to buy an iPhone. Let's assume they release iPhone, let's say iPhone 20 today now, like this today. they release iPhone 20 today now. Then now, everybody will be expecting the price to go up. Like maybe they should sell the phone. Okay, let's assume they release it today. Then the price is around, let's say, 3 million for just one iPhone. Three, no, within 2 months. Then the price now crashed. So just consider the price. Let me get this off my screen. So let's assume when they produce it. So they released the iPhone then from 4,000. Okay, let's assume from 1 million, then price. No, sorry. What am I saying? Let's assume I said 3 million, right? So from 3 million, let's assume this is the 3 million, then within two months, then the price now crash back to like let's say like to 500,000 naira. It's a massive crash. So maybe probably something is wrong with the iPhone company or whatsoever, their stock is down and everything. So then there's now a massive sell-off, so which affected their price. So then let's now assume they are now selling it for 500K. 500K, then you have the money to buy like just one. So then you bought it for 500K, then you didn't use it, you just want to buy, or you buy many quantity, you just want to buy, price has already come down. So this is, let's assume the price came down here, then you buy at $500, let's say $500. Then all of a sudden the price shoot up again. So the price just shoot up then to back to even more than the 3 million you bought. So then shoot up again from 500 to 3 million. The difference is huge. So that's how to do it in Forex as well. So you buy when price is down. So when price is down, or you see a buying opportunity, you buy and hold. So once the market gets to where your TP, there's what we call TP. TP means profit target. Like, it's just like, okay, I already know that. Okay, I bought this thing for 500,000 naira. Then I'm going to, so my profit target might be different from your own. It's not compulsory. Even if we take the same trade, where I'm exiting might be different from where you want to exit. So it's two different things. So who I am is different from who you are. So that's just it. So imagine I bought for 500,000 naira, then I want to sell for, my own is just to make like 100% return on investment. I bought for 500,000 naira and I want to sell for 1 million, which means I make extra 500,000 naira profit. So that's what I want to do. So my own profit target now might be around here. So I'm out. Once this price gets here, I'm out. I don't make profit, so I'm not doing again. Then why some other people might be saying, no, this thing has the potential of going to like 3x or 4x. So like they want to make more than, like they want to make 2 million, 3 million. So their own profit target is different from your own. So that's how it is. So when it gets to your profit target, the price will, once you set your profit target, will automatically take you out. But that's another topic. So I'm not trying to explain that part. So, that's what we call uptrend. So it means price is changing, it's going to the upside, going to upside. So it will retrace a little, then flash to the upside. So I just hope we understand this part. So let me show you another example of uptrend. So we see this part. So let's see. I don't want to spend much time. Don't want to spend much time. Let's see. Uptrend, 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 uptrend. Uptrend, 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 uptrend. Okay. Okay. So see this part now. See this part. Market is here, price is here, right? So this is price coming down and doing so. Then when from here, look at it. There was no, this side was not trending. Like this side is not trending at all. By then, there's nothing like trend here. It's not trending, it's just ranging within a box. So then when the market decided to start trending again, so let's apply our trend line. So from here now, you can see it started heading to the upside. You can see, I believe someone can see it. You can see it. So it's just going, just like there is an invisible force. That's, this thing, if not for this trend line that I just applied now, you wouldn't have known that, okay, this thing is respecting a line. It's just respecting something to the upside, and it's just using it to trend. So that's what trend line helps you to do. It helps you to know, okay, when and where the next bounce is going to be occurring. So that's just it. You can see it. You can just see it now. I apply trend line now, then this chart now makes sense. You can see it. So it makes more sense. So you can see. So this is a drop here, then a small retracement, then plays around there, then shoot up, then a drop again, then a drop again. So that's a push up, a retracement, then push up again. By now, this point now, you're already know, okay. Now price is going up. So anytime this price comes back to this trend line, I'll be buying. So that's just, that's just the logic behind the trend line. So anytime this price comes to this trend line, though there are some certain things you will still be watching out for. So, but out of those confluence you'll be looking out for, trend line is one of them. So this is me now talking about one out of maybe probably like three. So trend line is one of them. So you already know, okay, once this thing come in, I'll be buying. So then luckily for you, then come the price came back, then bounce off the region, the trend line. Then here you bought, then you make a lot of profit. So then against another thing, so the same thing still happens again, then came up here, then came back again. You see, okay, trend line, then bounce, boom, you bought again, then it's shooting up. So that's just example of an up. So the opposite of uptrend now is downtrend. So opposite of uptrend now is what we call downtrend. So I'll still use the same chart. I'll use the same chart as my this same one as my downtrend as well. So, but before I use that, I will go to let me go to what is it called? Let me go to the chart I was using before, AUD USD, AUD USD. Wonder. So I think I have my. Let me just go. So that's uptrend. So uptrend, I believe we now understand what uptrend is now. I believe we do understand what uptrend is. So why is this thing looking like this? So this is, I said this is number one, right? Okay. So that's uptrend for us. Then the opposite is the downtrend. If something is going up, it must surely come down. It won't keep going up forever. So the second one here is the downtrend. So the downtrend. So if uptrend is trending up, then the downtrend means trending down, like we said. So let's assume we're coming from this up, then we have a massive drop here, then we have a push up, then we have a correctional, just like this, either like this or like that. So then we have another one here, then we have another one here. Oh, that was something else. So this is a push down, then this is a retracement, then this is another push down, then this is a retracement, then is another push down, and this is a retracement as well. This is another push down. So just like that, it will keep repeating the same thing. So it will keep repeating the same thing. So this one now is uptrend, right? So why this one is, I said this one is downtrend. So the same thing, the same rules, no change. So the only thing is just that this downtrend is just the opposite of this uptrend. So if you apply, but in this downtrend now, you don't apply your trend line at the downside like this. No. So you apply your trend line at the top, so at the peak. So at the peak level. So what I mean by peak level is at the resistance. You can call it peak. So there are so many terms we use. So you can call it, either you call it peak or you call it resistance, or even top. Just use the common language you understand by yourself. So this is the resistance. You apply it here. Here. So you apply it here from the starting point, which is probably here. From the starting point, then just apply, extend it beyond the price, like the candlesticks beyond. So that's downtrend for you. So what this simply means is that, okay, each time market comes down, then is now market is now heading to the downside now. So but because market is heading to the downside, it means, like, the fact that market doesn't head in just one straight line, so it's already an advantage to everybody. Okay, even if this thing come down, it will still give us a small retracement back to up, then come down. So what they call this one is, so this is in uptrend, you call it, let me delete this. You call it, so this is a high. So sorry, this is a low. This is a low. This is a low. So this is higher high. This is now, this high now is now, this high here, this point is now higher than this starting point. So you call it higher high, then this is a higher low. Why do you call this a higher low? Is because this low is higher than this previous one. So are you getting it? Like, this low is now higher than, like, is at the upper side of this previous one. So this is higher high, higher low. In uptrend, the market creates a higher high, higher low, higher high, higher low, higher high, higher low. Then we are expecting the market to create another higher high. Then just like that. So do we understand, like, a higher high, higher? This is a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher low. So just like that. So but in downtrend, we have a lower high, a lower low, a lower high, a lower low, lower high, lower low, lower high. You should understand the English now. Lower high means this lower high means this high that market just created is lower to the previous high, which is this one. Then lower low, it means this low that this market created is lower than the previous one, which is this one. Then another lower high, which means this one is lower than this previous one, then lower low, lower, just like that. So then let's see a live example. Let's go back to our XAU USD. XAU USD. Go back to our XAU USD. Okay, let me just press back, push. Okay, XAU USD. I think I was using Rwanda, right? So this is our XAU USD. So I was using this one as an example before, right? So I will still use it, this part now. So this is how we use it now. Let me flip it to the upside, to opposite. Back scale sharp. Okay, perfect. So let me, I want to say something. I'm gonna show you a bigger picture. A bigger picture. Okay, this is awesome. Okay, let's just let me wait to. Okay. Need to make my screen bigger. Yes. So this is XAU USD now. So now we want to apply trend line on a downtrend. So now we are going to assume, gosh, this thing is, the trend is crazy. So now we are going to assume, I just hope we see this very well. This is our starting point. Like, let's assume this is our starting point. Like, okay, well, this is the starting point because the thing is the chart is very big. So let's assume I want to apply trend line now on this thing. Okay, let me say this is my starting point. I want it to be more bigger. So that let me reduce the candles to quantity. So don't mind my screen, the size of my candles. Let me try to enlarge it more. Let me just choose a place we can all see very well. Okay, let's use this place. So let's use this place that we've already used in the past. So let's use this place. So let's use this point. Yes, cool. So let's assume now that this place is our starting point. Like this place is our starting point. So that, okay, now we've come to put in, okay, let's assume we are starting from this point. Yes. So we are starting from this point now. So then you can see this point now. So this is a high, right? This is a high, this is a resistance point. This small place is a high. The market came here, they put in a what? A low. Do we understand? That's a low. Then we now created a lower high, which means a high lower than the previous one from our starting point, lower than our starting point, a lower high. Then we came here, then to go, then come and put in a low, another low, which means a lower low, a low lower than the previous low, a low lower than the previous. Then we put in another high, touch this trend line again. This is now a lower high because this high now is this high we just created is now lower than this high. This one here is lower than that one there. So then we now came again and put in a lower low. Bam. So a lower low came again. Then after that lower low again, we price shoot out again, created a lower high. In this case now, you are expecting the market to come and create another lower low, abi, just to maintain the structure. So just to maintain the structure, then market came and created a higher low, then created higher high. So now it's now looking like the structure is now beginning to change, right? So, but I'm not talking about that change of structure first. So so this is a downtrend, like downtrend. So downtrend, you can see the trend line is even telling us that, okay, each time we come to this trend line, always bouncing, bouncing, bouncing. So that's just an example of a downtrend. Example of a downtrend, downtrend, downtrend. So I believe we all understand. But if you know you don't understand anything, please ask your question in the group. Just drop your question. I'm going to answer you. If I'm not there, Mr. Ben is going to be there. If Mr. Ben is going to be there, Miss Adiola is going to be there. If she's not there, Mr. Gabriel is going to be there. If Mr. Gabriel is not like there, Mr. Kelvin. So there are so many people there. They are ready. So please just ask your question. Ask your question. So the third one is the third one is the ranging. Is the ranging. So the ranging now, let me head back to my AUD USD, UD, USD, AUD USD. So AUD USD, scale. So here is my AUD USD. Yeah. Cool. So trying to get this thing back, it's not working. Okay, so we have two examples here. Then the three is the consolidation or ranging. So The third one, consolidation or ranging. So in consolidation or ranging, we already said it that the price has no direction. So what it means is that today you see it up, tomorrow up, this minute you see it up, the next minute is down, up, down. It's neither going up nor down. So it's just in between. So example of consolidate, you see price doing something like this. So you see price doing something like this, like in terms of uh, fluctuating, like if like it's just ranging. So it's just ranging. So it's just going up and down. So up and down and up. So let me just show us one example here. So it's just like in fluctuating mode. So I'm coming. Okay. So just like this. Oh, I don't know what's wrong with my network. Okay. So this is an example of, I'm just giving us a box now. This is a box, right? So when something is just ranging, it's just like something has no direction. It's neither going up or down. It's not going up, just creating equal highs, equal lows, equal high, equal. So just something like this, moving, just moving. So let's see a cool example. Just like AUD now, like over you can see from here now. This is from February till when till March, April, till this April, AUD was crazily ranging. So how do you now know range? You box it. Look at this. So you can just tell me now that okay, this thing has no direction. You can see like from here now to just focus on my box. Look at what we have inside this box now. So it has no direction. It's not going up or down. So it's just playing around uh, within this range. So that's what we just have there. So you can see this place as well. So starting from this point as well, from here to here, coming down here, you can see we don't have any direction. Nothing is looking like direction here. This is a range. So this is a range to this place. This is a range. So this is a range. You can see it. So it has no direction. This is a range. So you can see it, a crazy range. So it was just ranging while others are trending. So it was just ranging. So this is a range. So that's example of a range. You can see it, there is no direction. It's not going up, it's not going down. So just playing around. So this is another example of a range. You can see this is an example of a range, another range. I think this one is more simpler than the other two. So this is example of a range as well. So you can see it. This is a range. So I believe we do understand everything. So let me just do a quick recap. So we have been talking about the market structure, the uptrend, the downtrend, and the ranging. So the uptrend is where the price is heading up, creating a higher high, higher low, higher high, and higher low, just like we have it here. A higher high, higher low, higher high, higher low, higher high, higher low. So if you want to peep some people, if you see some people chart, then they label something like, I think they label something like that's higher high, right? So like you see something like this, like H, like something like this. So it's not, it means higher high. So then if you see something like if you see something like this, uh, so like HL, so that's higher low. So something like HL, so that's higher low. So you can see it. So this is a higher low. So this is a higher high, this is a higher low. So then this is a higher high again. Then this is a higher low. Then this is a higher high again. Then this is a higher low, just like that. So, but in what is it called? In downtrend, so we have a lower high, lower low. So we have a lower high. So we have a lower high, like LH, lower high, lower high. So you have LH, then we have lower low, which is the held. So we have a lower, this is a lower high, then this is a lower low. So this is a L. So lower low. So just call it whatever you want to call it so far you understand it. So this is lower high, then this is lower low. This is lower high, then this is lower low. So I just believe we understand this and I've done justice to this topic. Then so if we do have any, if anybody have any question, so you should drop your question on the chat, either chat box here or you drop it. No, it's better you drop it in the group so that we can attend to it. Then anybody can attend to it. So I think this is just going to be the end of this video. So this is going to be the end of this video. So what else? So I think for now, market structure has been dealt with. So market structure has been dealt with. So then again, if we have any questions, so you can just ask your question. So bye for now. Just